Saving up a full 20% deposit is quite hard to do, let's just be honest here. With housing affordability getting worse, wages aren't nearly growing as fast enough, it can literally take decades to save that 20%. Now, although you don't always need the 20%, sometimes you can even get away with 5% with government grants and schemes. What if you don't qualify for those schemes or even have the 5% deposit to begin with, but you still want to buy a house? Hey guys, welcome back. My name is Faizi, and on this channel we look at Australian personal finance, and today we're looking at some ways you can buy a house with zero deposit. So before I start off, I just want to say that we are talking in a general sense only. This is not financial advice. I'm not a financial planner. Please do some research and consider if this is the right thing for you. The timestamps for each method are in the description, so feel free to flick around. So when it comes to borrowing 100%, the guarantor option is very common. Guarantor is basically when your parents or an immediate family member has equity in their property or properties, and they're happy to provide a guarantee for you to buy a house. For example, you're buying a house worth 500k. You have zero deposit, but the parents provide a guarantee up to 20% of the property value, so in this case it'll be 100k. So what that means for your parents is that they need to have 100k in free equity, and your parents can only guarantee 80% of the property value. Now this is very simple when your parents don't have a loan on their house already, but it might get a bit tricky if there is a loan on there. So if a loan is already on the house, then the bank that you're going with needs to make sure that the parents have enough equity for them to guarantee. So if there is enough equity in your parents' house, that's great. The bank that you're going with will put a second mortgage on your parents' house. So in the same example as before, your parents will guarantee 100k. So in this scenario, if your parents' property is worth $1 million and they already have a loan on it for 100k, then there is 700k worth of equity for another loan. That means that your parents can easily guarantee. But if it's the same scenario and your parents already have a loan on their house for 800k instead of 100k, then they can't go guarantor because there's not enough equity in the property. I hope that makes sense. I'm trying my best here. Now the best thing with this is that you don't have to wait to save up for a deposit. You can pretty much enter the market sooner and start paying down your mortgage ASAP. And when it comes to paying for the home loan, your parents will not pay the repayments. You are solely responsible for those. And this kind of removes the pressure from them, and it sort of keeps you independent as well. One major benefit is that you can avoid LMI. Now this cost can be in the thousands or even tens of thousands, and it is one of the biggest headaches for first home buyers, and a lot of the times it excludes them from buying in the first place. Now the reason why you don't pay any LMI is 80% of the loan is secured against your property, and the 20% of the loan is secured against your parents' property. And this eliminates the need for LMI because the banks just want everything to be less than 80% LVR, and this satisfies the 80% rule. By the way, I made a video about LMI very recently. This is an in-depth guide to LMI, and it covers everything from how to avoid an LMI, plus some very important things that you need to know about it as well. So there's a link in description, and there should be a pop-up on your screen as well. Now you might still need to pay government fees or registration fees. It really depends on the bank. So some banks might want to see that from you, some sort of commitment from your end as well. Now, of course, with this method, you do need to know about the risks because they are very important. So with guarantor loans, although you are responsible for the repayments, you and your parents will be liable for the loan itself if you default on the loan, meaning that you can't pay on the mortgage. Because if you can't pay, the banks will need to recover the full cost of the loan, meaning your property and potentially your parents' property as well, and those properties could be both sold off. So have a think about this, because if this situation occurs and your parents only have one house, which is the family house, they could be at risk. Now, realistically speaking, if you can't pay your home loan and you miss 1 or 2 repayments, the bank isn't going to knock on your door or start harassing you with calls. It doesn't work like that. Or it's not like they're going to start spamming your parents with phone calls to start demanding the payment or demanding the house. Now, the banks have provisions for this, and they understand that out of a given amount of loans, every single loan will not be repaid. It's just statistics. So what might happen is you might be placed on hardship, and they might lower your repayments or even get rid of your repayments for some amount of time. So basically my point is they're not going to sell the house straight away. It's a long drawn out process, and it takes many months or even a year or 2. But either way, even if it does take long, your parents' property is still at risk, so be mindful of this. But if your parents have more than one property, that's the ideal scenario for a guarantor loan. For example, if they have a couple of investments, and if they have enough equity in those investment properties, the bank can take those properties as security and not the parents' family home. So with the guarantor loan, it's important that your parents seek financial and legal advice. A lot of banks recommend this as well, and it's for good reason. Your parents basically need to know what they're getting into. They need to understand the risks. And some banks won't even let your parents return the loan documents until a number of business days have passed to actually verify that they had some sort of time to consider it. Before we go into the next couple of ways on how to buy a property with no deposit, please leave a like if you're finding value so far. It really helps out with the YouTube algorithm. Now, if you've got other investment properties with equity in them, the bank can use those plus the new property you're buying as security. For example, you have a property worth $500K with $200,000 owing, and you want to buy another $500K property. You don't need to get another deposit as long as you have the income to support the debt. Both properties can be bought and secured together, and the final LVR will be about 70% plus other costs like stamp duty, and this can be added onto the loan as well. So basically, if you have the income, you can act quick, get the right property without waiting. Now moving on to the next method, and this is getting a gift from your parents, or it can be from your relatives as well. It really depends on the bank. It can be an inheritance as well, or a large sum of money. Now based on the research, 40% of first home buyers relied on parental or family assistance as a loan or a gift to help with the deposit. So this is actually more common than you think. So if for some reason you are embarrassed to go to your parents to ask for help, just know that so many people are already doing this, and it makes sense given how expensive property prices are. So if your parents can provide a gift for 20% of the property value plus the costs, then you can avoid paying LMI and get away with paying no deposit. Or even if it's a gift of around 8%, you can still get away without a deposit, but you'll have to pay LMI. Just keep in mind that if you have to pay LMI or if the LVR is too high, the banks want to see at least 5% genuine savings from your end to show your commitment. If you don't have the genuine 5% savings, some banks might want to see a rental repayment history if you're renting, basically the rental ledger from a real estate agent. So the whole point of this is that it shows that you can consistently pay rent, therefore by the bank's logic, you can consistently pay your home loan once you get it. And it gives them a bit of confidence. Now once again, things are different with different lenders, so do check with your broker. Now this is the last method, and I do not recommend this, and the banks don't either, but people do this and they somehow get away with it. Now once again, do this at your own risk. So basically it is taking out a personal loan to pay for your deposit. Just keep in mind that when you're doing the loan application, the bank will go through your credit file, and depending on the bank that you're with, the personal loan will show up, the amount of the loan will come up, the date that you applied for it, and your repayment history so far. Now depending on who actually assesses your application, it may be obvious that the loan was taken out to pay for the deposit. So they may ask you further questions on the purpose of the loan, especially because of the timing of the loan. It seems a bit odd that someone would take out a personal loan right before they buy a house. Now once again, people do get away with it or they get caught, and if you get caught, the banks will not finance the application and you will get declined. Now this is a huge red flag because it shows that you don't have the consistency to save money. Therefore, how can you have the consistency to pay your home loan on time? The other thing to consider is that a personal loan is one of the biggest killers of borrowing power. Now personally, I have dealt with many customers, and if they had a personal loan, a lot of the times they did not have enough borrowing power to refinance or buy a property. So if you do go down this path, you need to have a high income, otherwise all this effort in getting a personal loan, paying for a deposit, applying for a loan, is just going to go to waste. So there you have it guys, hopefully you got some value out of this video. In summary, no deposit home loans are possible in Australia, but for most people, it can't really be done. Also, if you want to know literally everything about LMI, click the link in the description. That video has a lot of important things that you should know. Hope this helps guys. Please leave a like and subscribe. I make regular videos about mortgage broking, home loans, investing. So if you're into that, please subscribe. Thanks for watching. I'll see you in the next one. So if you do go down this shaky path, you do need